Let me put my headphones in. Can you still hear me?
Yes.
Beautiful. Just waiting for this PowerPoint presentation to come through, which obviously you guys are all waiting for anxiously because it will be so exciting. It will change all of your lives forever.
Of course.
I don't know if it's ever going to make it, so let's just kind of like go ahead. So I'll just kind of introduce myself. My name is Sam Messerly. I'm a financial advisor at Merrill Lynch. A beautiful bull logo there. I've been a financial advisor for not a very long time, for about 9 months. Prior to this, I was in business. I was a senior manager for about 15 years in various different companies. I traveled a lot, and I just kind of wanted to stop traveling. So that's why I got into financial advisory business. I've managed, huge budgets and projects and millions of dollars, and all the way down to my own personal checkbook. And I think, the whole idea really of like getting together with you all today is to kind of talk a little bit more about, personal finances and, kind of making good decisions and things like that. And I think, I will be the first to admit I have made bad decisions in my life. There's no doubt. I think if you've, gone through your whole life and never made a bad financial decision, I would like to meet you and understand what, how that magic worked in your life. So, there can be a lot of challenges when you get into finance and you start learning about things. And, that was really kind of an exciting thing that I've learned about throughout my life. And I've been investing in the stock market, things like that, since I was in high school, really. I've been following it for a long, long time. It was just something I kind of got into. I was always interested in it. We're all interested in different things. And this was just something that I've always just kind of been interested to. So when I wanted to get a new job, that's kind of how I ended up getting into this. And I really like it. The other thing too is it kind of allowed me to really understand how money works, how the system works, how you can use the system kind of to your advantage if you try. It's not set up to make it easy for you. It is set up for you to fail. So there are a lot of pitfalls out there in the world. A great example of that is just show of hands here. I can see at least 2 of you, Danielle and Melissa. Have you guys ever got one of those credit card offers in the mail, like those checks? It's like 0% for whatever, or super low. Have you ever used one of those before? Has anyone ever used one? I have. I've used one. Yeah, you have?
Oh yeah, in the sky, and the interest rate was bananas. But I wasn't worried about that at the time.
Right. Yeah, I think we've all kind of made some of those mistakes, right? It's like, well, I really want to get this thing, whatever that thing is. And I think for us, it was, I can't remember what we used it for, probably vacation and something stupid. And I think most people go into something like that with the best intentions, right? Like, oh, I'm going to borrow $1,000 or get this $1,000, this great deal. I'll be able to pay that back in a year. No big deal, right? Well, typically, I think what happens is, at least in my case, what happens was, it just became like, oh, I'm not worried about that. And then next thing you know, something may happen in your life, and maybe you're out of work, or maybe you have a financial hardship from like a medical expense or who knows what. And then it's like harder to pay that back, and then the interest adds up, and next thing you know, it's not $1,000 you owe American Express or Visa, or Chase Bank or whoever that is. It might be $1,200, right? It's going to take you 40 years to pay it back if you're paying it back $5 a month. So I guess today the goal is to talk about some of the things like that. Again, there's lots of traps out there to try to catch your money, and here at the bank, we're very good at trying to capture your money. Your goal should be to try to use those tools to your advantage when you need them, but don't fall into the trap like I did, and I'm sure maybe some of you have before, which is taking out a debt that you plan to repay, but you may not be able to in the future because of some challenges challenges do come up in your life. So looks like this presentation is not going to come over, so just do this the old-fashioned way. So one of the big takeaways, there's kind of like 3 or 4 main takeaways in the presentation, and I think they're all good. Okay, so I think one of the first main takeaways is have a rainy day fund. If you have watched television and you've ever watched a financial show, if you know Susie Orman, if you know her, listen, people love to talk about the rainy day fund. It's a hard thing to do. Oh, it did make it over. And it's definitely something I recommend for everybody to set up. There's actually a woman that calls me pretty regularly, and she's got some challenges, but every time she calls me, she's always like, hey, I want to make all this money, investing. And I say, well, okay, well, that would be great. Do you have a rainy day fund? No. I'm like, well, let's start there. And I always tell everybody kind of like the same thing, which is, let's start with the simplest thing we possibly can, which is, like a rainy day fund. It's super duper easy. I don't know.
Yeah, can I intercept real quick? This is Danielle.
Yes, ma'am.
Are you speaking of the, having 3 months worth of I guess, income, to handle bills and whatnot? Is that what you're speaking?
Yeah. So good question. And you guys, just because we're doing this really informal, right? Just jump in with your questions. So yeah, I mean, the idea is to have at least 3 months. I got a friend who's got a year, which, hey, good for them. I wish I could save up a year's worth of money and not touch it. But, sometimes I think the goal can seem a bit, you can't make it Mount Everest, right? If 3 months is Mount Everest, you got to be realistic. Just start super simple. There's simple ways you can do this. So every day that you get paid, so every payday, whether that's weekly, bi-weekly, twice a month, once a month, whatever it is, you can set up a savings account at your bank that will automatically, transfer money. It happens automatically. You can set this up at your bank where you will transfer, $10 or $50 or whatever that nominal amount is to a savings account, right? That is the easiest possible way to start this thing. If everybody here got their government stimulus checks, I got mine. Hopefully you guys got yours. If you haven't spent that money yet, it could be like literally the greatest seed money ever in your life to put in that rainy day savings fund. Maybe it is, maybe it's not. But if, when you do get that money, if you could put some of it aside in savings to save for the future, that would be the best case scenario. And you just try to add to that all the time, constantly. Like, you're not going to be able to save up 3 months of all your expenses. And what does that mean? It means, your rent or your mortgage payment, right? All your utility payments, right? All your debt payments. So that's like car, credit card, all that stuff, food. And then maybe like a little bit extra in there for I chopped my arm off, and at my house, hurting yourself seriously is a pretty regular occurrence here. So, having that extra money to cover those costs is incredibly valuable, and it will keep you from getting into a bad situation in the future, right? And a bad situation is like going to the credit card check, something like that, borrowing future money for this immediate need. Now, if you're already in a really bad situation, that's going to be hard to fix. How do you fix a bad situation? If you're in a lot of debt, if you have a big debt load, if, you don't want to answer your phone when people call, when you see that number, it says unknown, or if if it says Maryland and what that means, I think a lot of us have been there. I have personally been there. It happens, right? It happens to the best of us. You got to make a plan. You got to sit down and plan, make an actual plan with your lender. You got to call your lender up and say, listen, I don't want to go into bankruptcy. You don't want me to go into bankruptcy. So let's try to come together for a moment here. Because when you go into collection, the way that this works is, and I know this from business, if we send an account to collections, you only get back half the money if you're the company. So if you go to, Express, you have an Express card, you buy a bunch of clothes, whatever, and you spend $1,000, you don't pay it back, it goes into collections. Express only gets, 500 of those dollars. The collection agency gets the other half of it. So a lot of times the lender, Express or JP Morgan or whoever your credit card says on the front of it, they will try to work with you to structure some type of payment arrangement with you to help make your life a little easier. So, that's the best advice I can give you if you were in a situation like that. Hopefully none of you are in a bad situation like that. You never know. But again, starting with that rainy day fund and making sure that you have, that amount of money. How much is that? Each one of you, obviously, you're going to have a different amount of money, right? You got to sit down, add it up, be real. Like, go to your bank account. It's hopefully, if you don't have digital access to your bank account, you should leave this meeting and do that first. And then you can see what you're spending your money on, right? You can track what your debit card, what you're using it for, and little stuff adds up quick. You'd be surprised, going to Starbucks every day and buying coffee for $4, it adds up, right? You do that for 5 days, it's $20 at least, right? Plus the embedded cost of going there. You got to get in the car, drive there. Okay, well, yeah, it doesn't take very much gas. You do it 5 days, well, it adds up. Maybe it costs an extra $1 or $2 in gas. There's a lot of things to think about when you start thinking about budgeting and trying to save your money the best way you can. So I think it's really a good advice. And again, I tell this to any person, the same type of thing, which is number one, rainy day fund. Number two, try the best you can to control your spending. It's super hard, right? Everything is cool. I want it all. I want everything, all the time. I can be a habitual shopper. I can buy lots of things, lots of different things, and I am into everything. So it makes my life even more complicated. But I think what you got to do is try to make some decisions and try to make some tough choices. And what I've done in my own personal life to kind of control my spending is I said, okay, well, if I want a new suit or new shoes or a new tie or, something cool for my car or whatever, I kind of try to create a goal around it. And I say, okay, well, here's the goal. The goal is, okay, maybe at work, I'm trying to get some new accounts in the door. And if I get 3 accounts in the door, I'll reward myself by making a real, purchase that I can afford that I've been kind of putting off, which would be maybe getting new shoes. And I try to manage that in a way where I can say, okay, I'm going to go after the thing that, I'm going to get things that I need in my life that I actually need, but I'm also going to try to be smart about my purchases. And I'm not going to go out and buy, Louis Vuitton men's shoes that cost $3,000. That's not realistic, right? That's not a reasonable buy for shoes, right? I'm going to go to I'm going to shop around, which my mom totally taught me about. I'm a, TJ Maxx expert basically. And, I'm going to shop around, look online, try to get the best deal I possibly can. And I'm going to get, get black dress shoes that kind of meet my needs based on, the amount of money that I've budgeted for that. So I'm going to buy shoes, they're going to be $150. That's the maximum dollar amount to spend. So if I can find Louis Vuitton shoes for $150 and I want to buy them because they've been worn for 400 years, that's okay. Or if I want to spend, $150 on a pair of Stacey Adams or Aldos that are brand new, that are really nice, same, I'm just going to make a budget. I'm going to buy shoes, $150, maximum amount I can spend, and whatever I can get, I'm going to try to maximize my $150 on my shoes. I'm going to try to get the coolest shoes I possibly can for that $150. And that's kind of how I do things. That may or may not work for you, but I think everyone, you got to try to find ways to make these types of things work. Hopefully that makes sense to everybody. Okay, cool. I see some head shaking. Yeah, we're feeling good about that. Any more questions around maybe budgeting or maybe some strategies to, if you do have a debt problem, to maybe kind of work your way out of it? We all have maybe friends that have problems. And, if anybody wants to contact me after this, because you don't feel comfortable talking in front of the group, I'm available. I'll make sure that you guys have my phone number. You can reach out to me anytime. I don't mind to talk to you. I can't do it every day, but, I can I'm happy to help you, make your life better. It's not a big deal.
Hi, Sam. This is
Yes,
Emily.
ma'am.
Hi. I was wondering where would you suggest that we start up a savings account? Would you suggest our bank, or do you folks, Merrill Lynch, do you folks have a savings plan like with an IRA or?
It's a good question. Right, and they're all good questions. The only bad questions are the ones we don't ask. No one ever knows the answer to those. I think the best thing for you to do is to start a savings account at your current bank now. That's primarily what I would tell you to do. And just a regular old-fashioned savings account. If you have no money discipline and you know that you can't trust yourself, which I know people like that in my life. My sister is that person. She's like terrible. Like she's just bad. Again, I'm blaming my mom. But I love her, but man, she's just like loves to shop. And she's like really indoctrinated that to me and my sister. But anyway, what I told my sister to do is get a check, old school check, it's like a savings book. Like maybe when you were 9, your mom took you to the bank, or your dad or your parents or your grandparents or whatever, you might have had like a little kid savings account at the bank with like a little book, and you put your like 88 cents in the bank account. You can still get those at most banks. Again, if you don't trust yourself, that's a good way to do it, because you literally have to go to the bank to do it. You can still set up some of these automatic triggers on your account to do the automatic with feeding into that account. Most banks will, want you to start your savings account with like $100, something like that. If you don't have a good relationship with the bank, or maybe you have, an account at Huntington, PNC, and Chase, I would tell you to pick one bank and go with that. You don't need 10 banks. You need one. Even super rich people don't really need 10 banks. Most people just need one bank. Unless you have like $10 million or more, you need one bank. And most of the things you're going to need, you can get from that bank. I would tell you, if you're going to start a savings account, you can even go online, you can Google and say, okay, is there any deals out there to open up a savings account? A lot of times banks will give you $100 to open up a new account, or, $50 to open up a new account or something like that. If that is the case, you can move your banking relationship over there if that's something you want to do, if you think that's of value to you. I wouldn't really recommend trying to chase that around. I would probably just call my bank up and call my local, whoever has your bank. We bank at Chase because my wife worked there for a long time. And I would say, hey, Sue, what do you think? I want to open up a savings account. Do you guys have any deals right now on that? And if they're like, yeah, if you open up a savings account today and you put $50 in there, we'll give you $25 as long as you keep a minimum balance of $250 in there for 6 months. Fantastic. You got some free money. So that's what I would recommend. As far as Merrill Lynch, we don't have quote unquote savings account here. Merrill Lynch is owned by Bank of America now. So Bank of America obviously is a regular bank just like any other. And we have all the little bells and whistles at the bank. So you got home loans, car loans, savings accounts, checking accounts, all that kind of fun stuff. We'll definitely get to like retirement and investing and stuff, but I'm going to kind of save that towards the end as long as you guys are okay with that. It's a good question. Any other questions on that stuff?
Yeah, Miss Danielle, I had a question as well. I think where I get, and I have been sort of tied up, is with the income that I do have, trying to decide what goes into 401k, how much goes into 401k, what goes into my IRA, a Roth or traditional, what goes into savings for a rainy day, what goes into savings for maybe not necessarily savings, but for the, like if I have for entertainment or for shopping, trying to make it work within a budget, right?
Right.
And I just feel like I'm pulled in so many different directions, and I want to do it all, but then I just get frustrated and I just don't do any of it. Because I feel as though, you know, I feel as though, okay, $10 going to an IRA isn't going to do too much, you know? So I just, like I said, I just throw up my hands and I get frustrated.
Yeah, I mean, like that is super duper common. I think for most people, a lot. I mean, it's funny. I was just talking to my friend today about this. Like, you know, at our job here, it's a hard job. We call hundreds and hundreds of people on the phone and just kind of like waiting for someone to say, yeah, I'm interested. Most people aren't, and most people kind of fall into two camps. One is they're too afraid to kind of like peel back the layers of the onion and look inside. So I, kind of congratulate all of you for coming here today and like having this conversation, because honestly, I think if all of us look at our financial picture, your own personal financial picture, there's some not good stuff probably going on in there, right? And it doesn't make you feel good sometimes to look at some of this stuff. So again, I kind of commend all of you for taking the time to kind of go through this. And so again, I think most people are kind of scared of the whole process. And I think the other part is, to your point, it's just kind of like, it can be overwhelming. There's a lot of stuff going on. You just kind of throw your hands up because it's like, well, does $10 actually make a difference? Without question, it will. Yes. The answer is yes. Simple. Yes. The best advice I could possibly give you on, saving for your retirement would be this. At work, you have a 401k, unless you work for the state. If you work for the state, you have something different. But that's like similar. You want to try to get to save up to 10% of your salary in your 401k. Sounds like a lot. Sounds like a scary number. I get it. Just talked to a gentleman the other day. He's got like 9 kids. His wife doesn't work. He makes less than $100,000 a year, which is like most people, but most people don't have 9 kids, right? That's like, whoa, that's a hard deal. How do you save? What do you do? And, he's very fortunate. He works at a good company that has a good company match. You guys have probably heard about a company match. Always take advantage of the company match. It's like free money, right? So most companies are going to match 2, 3, 4, 5% of whatever your contribution is. So if you put in 2%, they're going to put in 2%. Whatever. So if you put in 2% and that equals out $100, let's keep this simple. That means they're going to put in $100, right? And you're going to keep going up to whatever that threshold limit is. And that kind of doubles. So, let's just say for sake of argument, $100, you're 2% at $100, and they're putting in 2% at $100. Now you're actually at 4%, right? Think about it like that. And that's why I say everybody should try to get to 10%. So for you, that means, you're putting in 7 and the company's putting in 3, you're at 10, that's good. Or, you're putting in 8, the company's putting in 2, however that works out. And you don't have to do it tomorrow. Many, many, many companies today have the ability for you to sign on to your payroll system and like make the change, at 2 a.m. in the morning when you get the fancy to do it. Hopefully, you work at a place like that. And that's what I would tell you to do. I would say if you're doing 1% now or 3% now, or whatever that amount is now, maybe every month or every other month, you just pick a frequency that you want to use, add 1%. And it's such a small amount out of your actual check, you'd be surprised. It could be as low as, $20. It could be like out of your actual paycheck that you get in your hand. I think everybody has $20, right? I think most people are blowing $20 in a week on, stuff you get at the gas station, like Coke and Slim Jims and whatever. It's easy to blow $20 in a week. It's like if you have $20, if you go to the gas station and you buy like a Red Bull for $4, and now you have your $16 and change, that stuff will fall out of your pocket like magic. Like 3 days later, you'll have like $1 left. You'll be like, what the hell? Where'd all that money go? You just bought stuff with it. So again, that's why I would say every month, maybe pick an amount, let's say 1%, and try it, right? And you try it for a month. And if it doesn't make a huge effect on your personal situation, then no big deal. You keep it, and then you can add, another percent. You just keep doing that. Another good time to do it maybe is at the end of the year if you get a raise. A lot of folks try to live, if you can live on what you're making now, and you get a a raise, although I think the prospect of many of us getting raises this year is probably zero, but let's be optimistic. Maybe we'll get raises this year. You know, you can take some of that money from your raise and put it in there. So, you know, if you're going to get a 2% increase in your pay or something like that, sometimes you could put that money away. So I would highly recommend you take advantage of your 401k at work. That's, you know, first thing you have, rainy day fund. That's most important. Second thing, 401k plan, try to get there to that 10%. It will make a huge difference in your life. Massive. Roth, stuff like that. I wouldn't get too worried about that. What's the best type of plan for you? I mean, you know, right now we are just basically at the baby step level. That's what we're talking about today. We can talk about more advanced stuff. I'd be happy to have those conversations with anyone here that would like to learn more about retirement planning, how to do it, what to do, how to be effective, things like that. I will take that offline because it's more personalized. So again, you just reach out to me after this, give me a jingle. I'll tell you my phone number right now. It's 614-323-2107. And you can call me anytime. If I don't answer, leave a message. I will call you back. So hopefully that answers your question.
Yes, thank you. Thank you, Sam.
You're welcome. Does anyone else have any more questions around like some of those things? Okay, good. The other thing I would tell you is you I don't know here who's maybe worked at more than one job. I have, obviously. If you have a bunch of 401ks just like laying out there in the world, you definitely need to pull them all together in a big pile, either here or somewhere else. If you have worked at 3 or 4 companies and you have 3 or 4 out like IRAs out there in the world, 401k plans that you left at your old company that you never did anything with, definitely call me after this and I will help you get them organized and get them into one place for yourself. And it will actually save you money, because a lot of times when you leave a company and you leave your 401k there, you end up paying like extra fees and things like that. The other advice I would give you on that piece of it is, if you ever move jobs from one to another, and hopefully you guys have been able to, climb your career, a lot of times you have to leave companies to do that. It's just the way it works these days. Don't take your 401k with you and take it to the new company. You want to open an outside retirement account, and there's a bunch of reasons for that, but primarily it just gives you more choices and it allows you to be more effective with saving for your retirement. So again, it's kind of more of a specialized conversation. Would absolutely be happy to have that conversation with anyone here. It's like no commitment. We're not going to try to sell you anything or anything like that. I'm just going to let you know what the facts are. If you want to move forward with Merrill Lynch, Bank of America, fantastic. If not, that's okay too. It's really just about empowering you guys and giving you the information. And I have like a legal responsibility to put your interests in front of my own when it comes to finances. So if you're an actual financial advisor, that's part of that. It's kind of like being a doctor, except I don't have to like run across the street and like help somebody if they drop 50 cents out of their pocket. So then any other questions kind of surrounding those things? Tasha, you got any questions? You got such a cool background. The other kind of, hey, yeah, super cool. I like it.
Yeah, I was in outer space earlier. I was like, let me change it. It's nice outside.
I like outer space. I'm a fan.
Yeah.
Sam,
So,
I have a question.
Yes, ma'am.
To let everyone know, I did drop Sam's phone number and his LinkedIn, just in case you didn't catch it on the invite, over in the chat. But do you have any strategies for moms who are working from home, preparing 3 meals a day, plus snacks, trying to teach, trying to work, and my breakdown is going out to buy food? Like, do you have any strategies to kind of combat that? Because that eats a lot of my money.
I hear you. It's like, I feel like it's like all of our lives, right? It's like you're working, you come home and you're so tired and you're just like, those kids are hungry, right? They got to eat. Too
But
bad
now
they
I'm
can't
home,
feed
Sam. I'm
I know
working
it.
from home.
Yeah, now you can't even escape, right? Like, me and my wife are taking turns. Like, I get the afternoon, she's got the morning, or like vice versa. I mean, it's a whole new challenge of life, right? I think you just got to try to make good choices with your eat out stuff. Try to like get inexpensive stuff. I mean, you're eating out anyway. You're probably not gonna be, you're not gonna get like, the greatest next vegetarian meal from eating out, probably, right? We're getting like Chinese food or pizza or something.
Right.
Like,
We're not going to
fortunately for me, my daughter's favorite pizza is Little Caesars. So like for $6, I can feed her, like, and pretty much a whole family. So that's a win. But I don't think there's a lot you can do about some of that stuff. I mean, the other thing we try to do here, just to try to be a little bit more budget conscious, is we just try to get like meals that are super easy, like chicken voila, like something that's just like idiot proof, throw it in a pan, put some, like in 8 minutes it's done kind of thing.
Mm-hmm.
We do some of that. We're not like slow cooker people. We're just not, can't master that thing. I can't tell you how many times we've ruined it. Pressure cooker, the Instant Pot, we get pretty good after. I don't know if anybody here's got an Instant Pot, but man, you can like make some, like, it's crazy. You put like frozen chicken in there, pasta and sauce, and like bang, like an hour later you have stuff cooked. So just, I think that's the thing, try to get to maybe like, again, it's almost like that special reward, right? Like, pick that day of the week that's eat out day. You make it like more of like an exciting thing. Like, hey, we're gonna have, Friday. If we can eat every day at home this week, and we can eat, whatever those boring things are that we like to eat at home, for us, it's we have like kind of like the same basic repertoire. I think a lot of people kind of fall into that. It's like we like, eat spaghetti and, chicken and whatever. And we say, okay, on Friday, we're going to go to what we call Chips and Cheese, which is like this little Mexican joint that's by our house. It's like a little cantina. It's really good. We call it Chips and Cheese because that's what my daughter called it. Yeah, she's 5. So anyway, that's where we go. And that's like kind of like our reward for being good the week. And it's not like super expensive. All 3 of us, we go there and it's like, $50. So it's not like we're going to like, I don't know, some fancy ocean club or something.
Right.
We're trying to keep it more realistic, and then we try to save our money for like the really like vacation or whatever. Like, you try to put some goals, save towards those things. And I think you got to give yourself that release sometimes. So I think that's why it's good to like create some little goals and then give yourself that little like out at the end, if that makes sense.
It does. Thank you.
You're welcome. Hopefully everyone.
I'm sorry, Sam. Can I add to that?
Yeah,
so Bridget, I just wanted to share. I want to tell you that I share your pain. Where I'm in the house all day, and I only have so many options to get out, and I'll go out and I'll get Chipotle. I'll get the kids meal though, because I want to spend $5. But it's that, like you said, I've been in the house all day. I've been doing this all day and I want to get out. And so you're not alone, sister. You're not alone.
Yeah, it sucks being trapped at your house all day. Although I did work from home for 15 years, so it's a little different when you're with your kids, though. That's a fact. So, the other thing that, there's other tools out there. You can use like Mint online. I mean, I've never used any of that stuff for budgeting. You can, if you feel comfortable using an app to do that, please feel free. The other kind of big piece of this thing is kind of around like loans. So like mortgages and car loans. Car loans are super tricky, right? If y'all buying a car, thinking about buying a car, it's about to be an incredible time to buy a car. I would say in the next, handful of months, probably gonna be some ridiculous deals out there. Be careful. I mean, there's gonna be a lot of deals, like 84 months, no interest. But let's just take a time out and think about that. 84 months. How long is that? 7 years. Okay. I do not want to be trapped in a car for 7 years. You can think about 84 months. That's 84 months of being trapped. That's what that equals. 84 months equals trapped, right? 72 months, trap. 48 months, trap. It just means you're trapped for that amount of time with that thing, unless you get rid of it. When you buy a car, and I love cars. I buy a lot of them. I would change my cars like my socks if I could. And I don't usually buy new cars. I buy used cars because it's hard for me to justify the cost of a new car. I can also work on my car. I like working on my car, and it doesn't bother me to buy a used car. I know that not a lot of people are comfortable with some of those things, and that's okay. If you are going to buy a new car, you got to be aware, one of the most important things to know, number one, is as soon as you buy that car and you drive it away, it's worth like a lot less, 10, 15%, 20% less, depending on the type of car. If it's an American car, it's probably worth 10, 15% less. If it's a German, European fancy car, it's probably worth 30% less. If it's a Honda, it might only be worth 5% less. So something to think about when you get into cars. And I think, when you're looking for a car, everyone has different things. Like for me, like reliability, I don't even care about. My wife, we had a car one time. It was this SUV, and it would start when it wanted to. And I remember my wife was like, "This is the most important thing for me. Is my car starts every single time that I put the key in it." And for me, I was like, "I don't care. I just go out there, hit with a hammer, it works, whatever." But I never really thought about that. So obviously that changed the way we had cars. This was really early on in our relationship. But I think it's important that you kind of make your list. It's just kind of like a famous thing called the Ben Franklin list. The left side of the list is I have to have really important stuff. It starts every time. It has wheels, really important stuff. And then on the right side, we put leather heated seats, right? Navigation. You don't need navigation. If you have a cell phone, you got the greatest navigation tool of all time. It's constantly updating and it works always. And it probably works better than your car's navigation. Google Maps is fantastic. It's cool. It's interactive, right? You're like, oh, wow, I want to go find some food while I'm on my trip. Bang, there you go. Not advocating driving and looking at your phone like a maniac, but again, things to think about. To lease or buy a car. I personally think leases are not a good idea. I like to buy a car. I think it's better. I think at the end of it, at least you have the thing. A lease is kind of like you're renting a car and you're kind of just throwing away a lot of money. I mean, there's some ups and downs to it, but my personal preference is buy a car. Depending on your financial situation and depending on your handiness with the toolbox, you try to make the best choice for you. The other thing about the loan piece of it, because let's face it, most of us aren't going to go buy a car for cash because cars are expensive. And even if you buy a cheap used car, to get one that's going to start most of the time when you put the key in it, it's probably going to cost you $5,000 or more. And most of us probably don't have $5,000 just cash money in your hand right now. So most of us are probably going to get a loan. What do we want to do? Number one, that banker that you have a relationship with, that helped you set up that that savings account, call them. Hey, I want to get a loan for a car. What do you guys got? You can call your friend Sam here. We got loans at Bank of America. You just call the 800 number. Get online. You can look around. Go to a bank, like a normal bank. What I mean by normal bank is, the kind of the brand name ones you know of. Or if you have a local credit union that you belong to. But I would look at maybe a big bank like Chase, Bank of America, Huntington, PNC, Fifth Third, somebody brand namey. And then if you have a local credit union that you like we have a military credit union that we use, the Comic Employees Credit Union, we'll check there. And sometimes the credit union might have a better deal. Sometimes the bank may have a better deal. But that's probably what you want to do, is kind of look at two sources. And it's really a good idea a lot of times to get your loan from the bank versus getting it from the dealer. Unless you're buying a new car, if you're buying a used car, a lot of times getting the loan from the bank is usually better, because there's a lot of shenanigans that the car dealers play with the interest rates. For example, I just went to look at a car 2 weeks ago. Okay. I wanted to buy a truck. We're talking about buying a camper because it's crazy and there's no vacations and whatever. Plus, why not? What the hell? Road trip for the rest of the summer. We're all working from home anyway, right? So I go to look at this truck, and the guy tells me that the interest rate on the loan is going to be like 9%. I was like, you're insane. It's not happening. Like, no. I'm not going to pay 9% on a loan for a car. It's like insane. And there's a great app you can download from the App Store. I have it on my iPad. I use it all the time, and it's free. It's called the Loan Calculator app. It looks like this. If you can see it. You probably can't see it very good. It's like a little yellow and black thing there. You can kind of see. It's not a fancy app, right? But it works. And you can put your rate in there. You say, okay, I want to buy a car for $20,000, right? Okay, and I'm going to pay on that car for 5 years. I think 5 years is like a realistic time to pay for a car. You start getting into 6 years. That's when, if you buy a new car, you finance it for 6 years. By the time you're done financing it, it's going to have over 100,000 miles on it. Just figure that out. Do you want to have a car that old? Do you want to have a car with that many miles on it? It's going to be worth a lot less when you're done financing it than if you do it for 5 years. And let's say that the guy gave you this rate of 9%, right? Okay, that's $5,000 in interest. That's a lot, right? If I got a lower interest rate, if I got let's see, like a normal car loan right now, probably 2%, maybe 3%. Let's say it's 3%. Okay, the interest on that exact same loan at 3% is $1,500. That's a huge difference, massive, right? You can have a better car. You can have a $4,000 better car. I personally would rather have a $4,000 better car. Now you can have your leather seats, right? Now you can have your heated seats. Wow. So I think, when you go to have that conversation, the car dealer is trying to emotionally trigger you to get you to buy now. They're going to tell you all kinds of stories. That's okay. Here's what I will tell you. And my dad told me this many years ago. It was a very smart thing to tell me. There will always be another deal. There's always going to be another deal, especially for cars. There's always going to be a better deal. You're not going to miss out on the lifetime deal because that doesn't happen with cars. There's no such thing. Now I've said that out loud to my wife many times. Oh, this is the deal of the century. We have to get it. She's learned that there's no such thing because I've said it so many times that obviously it can't be the deal of the century because there isn't that many centuries. We haven't lived in that many. So I think it's important to know that when you buy a car, and I think that's the kind of the financing trap a lot of us fall into. I mean, when your house is 30 years, that's a whole different world. But with the car loan, start at your bank. And when you go sit down with a car dealer, a used car dealer, and you tell them you're already financed, they're not going to be happy about it because they make money on that financing. So this 9% situation, which is a total true story, that dealer was adding percent to that loan to put in his own pocket. And they're allowed to do that. I don't know how the rules work for that and everything. I literally don't know how that works. But obviously they're incentivized to do this. And that's how they get paid. That's how they make extra money, right, on these car loans. So the other thing about loans is there's kind of two numbers you see a lot. There's the interest rate and then there's the APR. When you see an amount for some super low interest rate, just ignore that. It's not important. What you want to know is what's the total cost of the loan over time. That's the APR part, right? And that's the number that matters. The other part is irrelevant. Doesn't matter. Because that's what you're actually paying your interest. That's how it's actually working. So I'm refinancing my house and, the loan, the interest rate's 2.89%, right? I'm working with a guy right now. He's got a loan thing for 2.89%. He's like, wow, such a great deal. You guys are at 3 point, whatever it was, 3.35 or something. Yeah, okay. But what's the APR on the loan? Well, on this one, it's 2 point, it's I can't remember what it was, but it was 1.5% more with APR. right? So like they're trying to trick you on the front side of that loan. They're trying to say, oh, like, look here, it's like super cheap, low interest rate. But what they're doing is they're putting all these fees and things in your loan. You don't even know about this. And what they're really doing is what they're actually charging you is your APR number. So when you look at that APR number, you're like, wow, I'm actually paying almost 4%. So I'm paying more than I actually thought. So that's how they kind of try to trick you. So when you're looking at a loan, you want to make sure that, especially looking over like a term loan, you want to look at your upfront interest costs. I mean, it's an important, it's a number, it's something to know. It does feed into your APR number. It's something you need to know about. But the real number that you need to really think about is that APR number, because that's the number you're actually going to be paying, right? Because that includes all the fees, all the extra pieces and parts of the puzzle over the course of a loan. And that is what you're going to end up paying. So that's super, super, super important. And again, home loans, kind of very similar thing, works basically the same way. Questions?
Sam, I have a question.
Yes, ma'am.
If you go to your bank for a loan, do you have to know the vehicle beforehand? And are the pulls hard on your credit if you're shopping around?
Okay, good questions. Sometimes, depending on your bank, you may or may not be able to get like kind of quote unquote pre-approved for a loan. They're going to want to know usually like the make of the car. So they're going to have parameters. I think that's why I think it's good to talk to the bank first, because they'll say, okay, for example, like a Chase, for example, they won't loan on a car that's older than like, I think 6 years. Okay. So if your car's older than 6 years, they're not going to write a loan on it, period. They don't care what your credit is, how much money you put down, doesn't matter. Bank of America will do up to 10 years, right? So I think it's important to just call the banker first and be like, hey, interested in buying a car, how does your loan process work? And they'll tell you, hey, we'll finance the car up to 100,000 miles, 10 years old. Okay, great. That gives you some options. You can start to think about what you want. And then once you start to like, you know, you get on Auto Trader, you're doing your research, right? You're like, oh, I like this new Honda Accord. It's so cool looking, or whatever that you want. Then you can call up your banker and be like, hey, you know, I'm thinking about, I'd like to get pre-approved for a car loan. And the banker's going to say, okay, well, what kind of car are you thinking about getting? You're like, well, I'm thinking about buying a Honda Accord, 2016 Honda Accord with like maybe 50,000 miles. And I'm thinking about spending somewhere in like, maybe $15,000. And they'll say, okay, we'll get you pre-approved for that and, run your credit and do all that stuff. And then you're pre-approved for your 15 grand. And then every bank's going to have parameters they're going to want to put around that. Like they don't want you showing back up with like a 2001 Mercedes, $15,000, right? Their expectation is you're getting a Honda. So like they're not going to just give you the money either so you can go out and buy the car. There's some other little parts of the puzzle there. They'll explain all that to you, and every bank's going to do it a little differently, but they will definitely work with you on it. It's definitely a different way to do it than doing it through the dealer, but it does protect you from challenges that the dealer can bring forth. It's the best way to protect yourself, right? If you do decide to go the loan through the dealer, sometimes you can get better deals, but they're always trying to tack more junk onto those loans to try to get you to pay more. So it's just something to be aware of.
Thank you.
Yeah, no problem.
What
Yes, ma'am.
services do you offer? Like, I know it's like financial advising, but like, what all can you help with?
It's a good question. So what a financial advisor does is we primarily work with clients, folks, all kinds of people, everyday people. And we kind of help them answer kind of like the basic questions. It's very similar to what we're doing here, but it's just 100% kind of focused on investing. So we say, okay, Melissa, you want to retire someday? I assume you're not going to want to work till you're like, dead. Most people don't. I surely don't. Well, how are you going to get there, right? You got to make a plan. If you don't have a plan, you can't get to where you want to go. You need a roadmap. We're going on a road trip. It's called Your Retirement. And to get where we want to go, we got to plot a path to get there. So we sit down with you. We look at your financial picture. We get it's very much like being a doctor. You know, we sit down, we consult with you, we look at the challenges that you're facing, and, you know, instead of like referring you off to like the other guy, you know, we are the guy. So we're going to help make sure that we get you 100% squared away and kind of direct it off to where you want to go. And we do a variety of different types of investing, everything from like, you know, buying gold bars in a vault to simple stuff like setting up a couple $1,000, you know, IRA plan or Roth IRA or retirement plan. It's just really kind of based around what you need. It's 100% based on your needs. And not all financial advisors are like that. Merrill's different. And I had financial advisors before I came here in my own personal life, and I will say that we are different in the sense that we're really trying to put clients in the driver's seat. Like we're trying, you know, if you were the client, you know, we would sit down, we would go through all your financial stuff, and we'd look at, you know, how much money you got in your 401k, what kind of Social Security do you got? You know, are you married? When do you want to retire? What do you want to do with your money? You know, we ask like lots of good questions. We kind of start to get an idea of what you want to go. And then we start talking about your risk. Like, let's just say for sake of argument, Melissa, you had 10 grand, right? To invest. Like I just gave you 10 grand in a pile. How much of that money are you willing to lose? It's a real question, Melissa. How much money would you be willing to lose?
Oh, hopefully none of it. But for the sake of the experiment, we'll say 1,000.
Okay, so you're willing to risk 10% of the money, right? Well, we would say that that's pretty conservative. So when you risk 10%, let's say you could risk 10%, but you could gain 10%. Right? So that gives you like a movement there. So we would build an investment strategy around that risk tolerance. So I would say that would be risk averse, and we would try to create an investment strategy that preserved most of your money, didn't put it at risk. It gave you a little bit of return, but for the most part, you're just preserving your kind of quote unquote wealth. Some client, like I got another client of mine, he's willing to risk all of it. He doesn't care. Like his plan is to try to make as much money as he possibly can through investing. I don't think that's a good plan, but that's his plan. You know, it doesn't, I give you my advice. You can do whatever you want, right? You can't tell people anything. I think we all know that. Like we will give you the best advice we possibly can. That's our job. And then, you know, we're going to try to really guide you where we want you to go. But at the end of the day, it's your decision and you have to make the decisions. And we do offer free investment stuff here. We have a platform at Merrill Lynch called Edge, which is like self-directed investing. We can get you set up on that. If any of you guys are, you know, looking for something a little bit more robust, I'd be happy to help, you know, do a consultation with you, do like a little wealth plan for you, get you kind of moving in the right direction. Typically the clients I work with have at least $100,000 of investable assets. That's like minimum. Mostly the people I work with like even more than that, but I always work with anybody that comes to ask me questions. I always try to get them help set up on like Edge. Like my sister, for example, who's got, you know, a paper savings account. You know, for her, she's in a very similar situation, I think, to a lot of people that are, you know, kind of like in their mid-20s. And, you know, she's trying to save, she's got kids, you know, she's trying to make it all work. And, you know, for her, we get her set up on this free platform. It doesn't cost her anything. All she's got to do is put the money in there and then do what I told her to do, and she'll be fine. And we have stuff like that. If you need a little bit more hand holding and maybe you have like, you know, a little bit more money in all these outlying 401ks you have or something like that, they offer some more guided investing and things like that. So we can, you know, here at Merrill, we can definitely help, you know, anybody try to be successful. And I always feel like, you know, helping everybody is the best possible recipe just in life in general, right? If you want to help yourself, like I'm going to help you kind of get where you want to go. I mean, I can't hold your hand forever, but I don't mind to, you know, get you on the path and get you going in the right direction. You know, that works out good for me. I mean, you know, maybe someday you'll run into somebody, or maybe your aunt just win the lottery. Maybe you win the lottery. You're like, hey man, thanks for helping me out that one time. Here's $25 million. It doesn't matter, but at the end of the day, it's just about, kind of doing the right thing for people. And I'm a big believer in that because a lot of people help me out in my life and I like to help people. So any more questions from you ladies?
Yeah, Sam, this is Emily again.
Okay.
I have a home equity line of credit. Would you suggest I use that to buy a car if I need to buy a car, or?
That's a good question.
Deluxe. I mean, how would you recommend I use that in my future?
Typically, so I'll tell you what we do with like wealthy people with their home equity lines of credit.
Right.
And I'll give you like that's so this is what typically we do. So most clients that we have, we open up home equity lines of credit for, and it gives them kind of like an immediate cash resource when they need it. But it's kind of like an emergency fund. You really only want to pull that lever when it's like an actual emergency. So like if you're unemployed, you don't have a job, and your car's exploded, that's pretty much an emergency in my book. It's probably worthwhile to think about something like that. But if that's not your situation and you're like, hey, I really got to get this new BMW. It's like a hot deal. I love this car. I got to have it. I need the convertible. I need the leather. I probably would recommend not doing that. So it just kind of depends on your situation. The other thing I would tell everybody here too is like right now is a pretty good time to refinance your house depending on your situation. So if you haven't refinanced your house in a couple of years, you might want to think about it. The rates are pretty low. Depending on your credit situation, they definitely going to be below 4. And you could even get into the high 2s, depending on your situation. Again, a buddy of mine, he's trying to refinance his house right now. He's doing a 20-year loan, and he's like 2.89, which is pretty dang good. So
yeah, it's real good.
So yeah, it's just, again, if anybody here wants to refinance their house or has any of these other questions, I'd be happy to, again, talk to you offline. We do have stuff like that. I got a guy here I'd be happy to like help hook anybody up with. He's a great guy. His name's George. He's like a real fighter for you, the client. So I always think that's a good thing to have. Is a lot of times you get in with these like, pick some big name off TV, right? Quicken Loans or whatever, one of these folks. And you call them and it just becomes like a, okay, I'll transfer you to the next guy. Okay, great. Sounds good. We'll transfer you next. It's like, they're not really like fighting for you. And I think it's nice to have like somebody that fights for you. Maybe you pay 0.1% more, but like over the course of your loan, you're talking like, $12,000 over 30 years. It's not even worth thinking about. And that's the other thing too, I think about the home loans is, when you're getting a home loan and like, don't get too bent out of shape about your rate. If you get like, your friend gets a rate that's like 0.2 or even 0.5 better than yours, because over the course of your loan over 30 years, it's not that big a difference. It's just not that big a deal. I used to get really like excited about those things. And when you get your loan calculator app out and you really start to look at the numbers, you realize that when you think about it over 30 years, it's not that big a deal. So I love that loan calculator app.
Sam, what website would you recommend to check your credit rating?
I honestly don't have like a good one, but I used to subscribe to Equifax for myself. Like I just had my own, like I think it was Equifax, or I think it was Equifax. I wouldn't necessarily recommend that. You can go to any of those credit companies and request your credit report. I think they have to give it to you once a year for free. So I think you can get one per year for free.
I just never know which one to go to for a free one. I know the reporting.
All three of them, like TransUnion. Yeah, so I think TransUnion, Equifax, and I can't remember the other one. I can't remember what the name of the other one is, but there's 3, and they will give you one for free. You could probably also go to like the federal government's Consumer Protection Bureau and get some information there. They probably have some pretty good stuff for that. I would definitely recommend something like that. When you do like a loan with your bank, that banker friend that you have now, and you do like that car loan or you do your home loan or something like that, they'll tell you your credit and they'll give you the report if you ask them for it.
Oh, okay.
So like if you refinance your house or something, they'll have it. One additional word of caution on home equity lines of credit. A lot of times, it's quote unquote your second mortgage, it's going to have a higher rate of interest than your actual mortgage. So watch out for that. Again, I've very often seen people with like really low mortgages, 3%, 3.5%, whatever, and then a home equity line of credit is like 5%. So, kind of back to your car thing, it just kind of made me think about that. Probably cheaper to get a loan on the car.
Yeah, I was surprised that the HELOC just dropped a couple percentage points. Mine is at 3.5, 3.6 now. It actually dropped a couple percentage points recently. I was pleasantly surprised.
That is good. It is good. Yeah, again, I would just totally treat that like a rainy day fund. And I would try to pay that. If you have a balance on it, I would try to pay it off as fast as possible.
Okay,
and
thank you.
The easy way to do that is to refinance your house. If you don't have like the equity to do it, that's the fastest way to pay off your HELOC if you don't have the actual cash in your hands to do it.
Okay, thank you.
You're welcome. Good questions, guys, ladies. What else? Any other questions? Nothing. All right.
How about a big thank you to Sam?
Yeah,
thank you,
much.
Sam.
No problem. I'm glad I could help.
I would like to call you, Sam. This is Emily. I would like to call you and talk with you a bit. Just,
Yeah, why don't you give me a call like right after this call on that 614-323-2107 number.
Okay.
Just give me a call right there and we can have a little chat. And again, Melissa, if you want to talk or, any of the rest of you, please just reach out. I'm available most of the time, especially now when it's like all crazy. There's a lot more time for especially, kind of what I like to call diversions. And these are kind of fun diversions for me. So I'd be, again, very, very happy to help anyone here, coach you guys through anything you need help with on the financial side. And you just reach out. I'm here for you.
Thank you, Sam.
You're welcome, ladies. All right. Well, I hope you all have a great weekend. Be safe. Try to get out, go to the park. Take the kids out, make them like run around in the woods and get dirty or do something. I mean, otherwise, you guys will just probably all kill each other by next week. So definitely make sure everybody gets out and stretches their legs, breathes in some fresh air, catches a couple of sprays of sunshine, and we can all go face it again next week. So have a good weekend.
Have a good weekend, everyone.
Thank you,
ladies. Thank you, Sam.
Thank you, Sam.
Thank you, guys. Take care. Bye.